Good morning and welcome to the Star Resources PLC investor presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time via the Q&A tab situated on the right-hand corner of your screen. Simply type in your questions and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company can review all questions submitted today and publish responses where it's appropriate to do so. Before we begin, I'd like to submit the following poll. I'd now like to hand you over to Alex Walker, CEO. Good morning, sir.
Thank you very much for that introduction, and thank you all very much for joining us again today in February of 2026, which feels like a very transformative year following on from the end of 2025 for eStar. So I'm really excited to give you another little summary of what occurred at the end of last year and how we see that playing through for the remainder of this year. We're doing it, of course, at a time that we're sitting at fairly record high or close to record high copper and gold prices, which is really exciting. And at another time when companies like BHP, for the first time in their history, have posted revenue from their copper divisions more than their iron ore divisions. And that's as a result of refocusing the companies the last few years to push towards copper as the commodity of the future. But also, of course, because of record high copper prices. And what we see is a structural shift in copper demand, the supply not meeting it. And so we think that it's very, very possible over the next few years to continue to see pretty significant growth in that copper price. So I urge all of you to consider your exposure to copper in the portfolio. And obviously, I think eStar is a fantastic place for that. And this is why. So a quick summary of the company today. The company has a couple of key assets and partnerships now, having been operating in Kazakhstan for over 5 years. The first is Verkhuba, which is our only JORC-compliant resource, 20 million tonnes at about 1.1% copper for more than 230,000 tonnes of contained copper. At the end of last year, we signed a contract with Xinhai, Hong Kong Xinhai Mining Services Limited for that deposit to advance that through to production. We have another Soviet-era deposit, which, similar to how we started with Verkhuba, we put a JORC exploration target on, similar in size, but twice the grade of Verkhuba. We have an exploration joint venture with a top 10 global gold mining company in Endeavour Mining, which we're incredibly excited by. And we have 3 porphyry epithermal targets, which were the result of significant amount of desktop work over the last few years, and last year visiting more than 25 targets in the field and picking up 3 of those. More recently as well, Endeavour converted their loan note at the end of last year with the change in the LSE rules. So eStar is now sitting at just under 550 million shares, with Endeavour Mining as the largest shareholder at 14.3%, and board and management are the next largest at around 10%. Importantly as well, because of the exercise of the options at the end of last year, is we actually have very few options and warrants on issue. So in terms of management and staff, it's around 4% with an average price of about 3.1p. And in terms of external brokers warrants, it's about 1.1% of the shares on issue with an average price of 4.5p. So both of those, one in the money in terms of staff, and the other one outside the money. But we don't see that as being any further dilution to the company in the foreseeable future. Quick reminder about Kazakhstan as a jurisdiction. We can add a couple of extra players to this slide now as well, of course, with Endeavour coming into the country at the end of last year through eStar. But the point about Kazakhstan is the reason we came into the country is because its evolution as an exploration hub. It is one of the most fantastic places in the world to operate. They changed their mineral code to match that of Western Australia's, and we've now been operating there efficiently for 4 years. It's a secure jurisdiction. It's a major transport route between China and Europe, and will remain that way. And very recently, we've seen additional MOUs signed, for example, between the USA and Kazakhstan, and fairly significant commitments to invest further capital. So I think that we've seen a lot of new big foreign companies like Barrick, like First Quantum and Fortescue and Ivanhoe and Endeavour come into Kazakhstan in the last few years. But we'll continue to see that evolution over the next few years as it ramps up. So, of course, East Star is in one of the best positions to be able to take advantage of that. Just a quick summary of the location of our process and a little bit more about Kazakhstan as an operating jurisdiction. Not only does it have the rules and regulations to operate, but it has the capability. It's got one of the largest rail networks in the world. It is one of the largest producers of, it is the largest producer of uranium and one of the largest producers of copper and gold. And it's certainly our argument that that it should be higher in those statistics, but largely isn't due to underinvestment over the last 50 years. And so that's why East Star is in Kazakhstan, to hopefully try and remedy that with new discovery. All right, we're just touching on the strategies broken down in a little bit more detail. The first strategy is our volcanogenic massive sulphide strategy, focused in the east region of Kazakhstan. We started this strategy because we felt it was achievable for a small company. Small companies tackling early stage porphyry projects can be often quite difficult, very expensive to drill, with no guarantees of results. With our VMS strategy, obviously there's still no guarantees of results, but the fact that we've been able to convert one project to a JORC resource, we have a second Soviet era deposit already, starts to indicate that we're having quite a lot of success in that region. Importantly, it's infrastructure-led exploration, and so we see that as having a very low economic threshold for development and very achievable for a junior mining company. The second one is copper porphyry and epithermal, which came out of Chris Van Wyk, our technical director, joining us, and us being a part of the BHP Explore program in 2024. And we were able to do a fairly significant breakdown of the Balkashili magmatic arc and data collection. And so we've continued with that strategy as a result of that initial work done through BHP Explore. And of course, that work is now feeding into our joint venture with Endeavour Mining. So Rudny Altai, with the hard work, is starting to pay off. We've been operating there for close to 4 years now, a lot of which has been learning how to operate and data collection. And in doing that, we've been able to delineate, I'm going to say 1.5 deposits, one deposit, one Soviet era deposit. And we've got some fairly advanced exploration as well in our targets of Rulikha and Talovskoy, which I'll take you through briefly. We started to refine our land package. We're not sitting on land for long periods of time if we don't think that there are targets which sit at the top of our priority list, something that we will intend on drilling within the next 2 years. We release that land, and potentially something we come back to in due course. But our focus is to really drill, literally and metaphorically drill down on target areas to refine where we want to be exploring. So we're not here to land bank, we're here to make discoveries. And this is a fantastic place to do it. We have these two key areas in an infrastructure-rich region with smelters, excess capacity and copper concentrators. Hydropower makes up a reasonable portion of the power infrastructure in the region, so very low power costs, and water and rail, and a highly qualified workforce as well in the area. So this is a great place to be making discoveries, and off the back of that, we think that a discovery will be able to excel into production incredibly quickly, literally within the sort of 3 to 4 year off a new discovery time frame, rather than the 5 to 10 years which you might expect from a larger project or something that doesn't have the same infrastructure. Verkhuba, at the end of last year, we signed a deal with Hong Kong Xinhai Mining Services on, and the concept of that is to continue to drill out the resource, conduct the feasibility studies, and then put the project into production. I think this is a fantastic effort from the East Star team. It's quite difficult to bring in partners on a pre-measured or pre-feasibility study project. And so the fact that we've been able to bring someone of Xinhai's ilk into this project at this stage is a testament for both the East Star team and the work that we've done, but also the potential of the project and what Xinhai see in it. So the structure of the deal is that East Star will put the project into a joint venture company, and Xinhai will invest 1.5 million Australian into that company initially, and that will carry through the additional drilling and early stage feasibility work, and they'll receive 15% of the equity for that investment. And then over a series of staged investments, Xinhai will eventually earn into about 70%, or will earn into 70% of the project. And that is in essence, on commissioning of the plant. So commercial throughput capacity of 1 million tonne per annum plant that is located on site. We think, Xinhai have indicated that the investment for that would be around $65 million. And so you can start to see what a see-through valuation is of this deal structure just on the capital invested by Xinhai for East Star's 30% of that, let's call it $65 to $70 million investment. So we're really excited by that. There's no doubt that someone with Xinhai's expertise will put the project into production faster and cheaper than East Star can achieve by itself. And so we really hope that this is start of more major cooperation with Xinhai, and it's certainly something we've been discussing with them. Just a little bit more on Xinhai, because I've had some questions on that. Excuse me. Okay.
Hi, Alex. I think we've just momentarily lost you. I'm just going to refresh you and bring you back through. Hi, Alex. We can hear you now.
Okay, great. Thanks. I'll just shut my camera off just in case it's a bandwidth issue. But just quickly on Xinhai, they've been incredibly aggressive, certainly in the last 12 months. But since they were established, I think it was 1997 that they were established as a company, and they've grown phenomenally. More than 600 projects worldwide, and they are building and operating and managing dozens of mines globally today, including in Kazakhstan, which is yet to be put on that map because they haven't finished the construction plant. But they have over 100 people in Kazakhstan today building a plant for one of the arguably national mining companies, or one of the better known mining companies in the country. So they see East Star as a bit of a spearhead for them to be able to get access to new projects, and we hope to be able to partner with them on other bits and pieces that we can find as we conduct due diligence on projects which look quite prospective. As a company as well, certainly on the ASX, they've been very aggressive in the last 12 months. They've signed deals in excess of $42 million with 7 ASX companies, and that is largely the same as East Star. It's to take them through feasibility and into production, in the hope that they will, not the hope, with the precondition that they get awarded the construction contracts and the management contracts at market rates. And so, we see that as a huge validation with some of the people that they're operating with already, and the fact that they have invested real money directly into those companies is a real win. So we think that they'll be a fantastic partner, and we really look forward to continuing that partnership. Moving on to Rulikha, just in a little bit more detail. This is the summary of the JORC exploration target that we have for the Rulikha deposit. The main target area, target 1, has had 3 drill holes into it. So what we have here is an extrapolation, not of spurious exploration targets where someone said, well, we think there's 100 kilometers of strike because of a large fault zone and a couple of soil samples, so there could be millions of ounces. This is from actual drill logs from historical data, just like we had when we started with Verkhuba, before we were able to convert it to a JORC resource with our own drilling. It's an exploration target that's constrained by a pit shell with a cutoff grade of 0.5% copper. And so once again, this isn't a what could it be as in its absolute entirety, and the whole thing. This is what we genuinely feel might make it into a mine plan if eStar is able to replicate these historic drill results and have infill drilling and that reaches similar grades and widths. So not something to be taken lightly by any stretch of the imagination. We think this is very, very real. And so we're really excited by it. The location is 9 kilometres from a processing plant, being the Talovskoy one. Although, as we've seen with Xinhai, perhaps, we might be able to partner with them or look at developing our own plant in this region. It's 2 kilometres from a railhead, which you can send concentrate down to China or through to the smelters around Kazakhstan. So very, very low infrastructure cost. It does have some hurdles with regards to permitting because of its proximity to a settlement. And so we're pushing through that at the moment. And we feel that could be quite a big catalyst for us this year if we are able to get approval and drill these targets. On the exploration front, last year we drilled 2 targets in Rulikha North. You can see the target 1 and target 2 areas highlighted in the previous slide for the Rulikha deposit proper. But our IP anomalies and some EM anomalies are to the northeast of those targets, which we are calling Rulikha Northeast or Rulikha North and Talovskoy. So last year with Rulikha North in particular, we drilled our highest IP anomaly and we hit more than 120 metres of disseminated sulphides with more than 90 metres at 20% pyrite. So what we're seeing is a lot of very, very thick intersections of sulphides in the system. And it is very, very close proximity, as we know, to other operating mines, being Talovskoy. It's in the same rock package, and also to known deposits, being the historical Rulikha deposit and the Talovskoy deposit. And so what we feel is we've drilled the smoke very, very close to the fire, and we hope to be able to do further drilling on Rulikha North and Talovskoy this year. We'll be conducting an electromagnetic survey to give us a little bit more refined indicator of where the massive sulphide source is, where the conductor is. And then assuming we get a conductive source, then we will be drilling that this year as well. So what we would love to see is, on top of being able to drill a Rulikha deposit, is making an additional discovery with regards to Rulikha North and potentially Talovskoy as well. Moving on to the Endeavour joint venture. We've kicked off this joint venture. We had our first management meeting in December in London, and we approved the annual budget. We approved the first quarterly cash draw. And so we've been in the process of managing all of the paperwork associated with that, transferring staff and hiring additional staff to implement this joint venture. They've been hard at historical data review and conversion and digitisation. And so we're really excited by what might be achieved off the back of this program. I have to say I've found Endeavour just fantastic to work with personally. They've already visited Kazakhstan once this year, their technical team, and we intend on visiting again with them in about a month or so. And what we really hope to achieve is additional tier 1 discoveries. Endeavour aren't in Kazakhstan to discover anything less than about 3 million ounces. They see that as the hurdle for them to consider putting something into production. And so what we would love to be is a 20% shareholder of a mine that Endeavour is building and putting into production of more than 3 million ounces. Obviously, along the way, eStar are providing their in-country expertise, their database, and for that, we are getting a management fee, and we will get bonus payments along the way, depending on what resources we're able to actually convert into the joint venture. So hugely exciting for us. It's a big 2 years ahead of us, and we'll see what we can convert that into. But I really look forward to updating the market as we acquire projects or acquire land packages from staking new ground. Just a quick couple of slides on our porphyry and epithermal targets. Snowy, we've provided a little bit more detail on. So these were derived from the BHP Explore program. We've undergone, outside of Snowy, which was pegged a little bit earlier because it was part of that Explore program. The Piket and Judzha targets came off the back of visiting more than 25 targets in the field, and those 25 were derived from more than a year's worth of desktop work, largely from the BHP Explore program, historical data review, and so on. So we're excited to have these targets. We conducted some sampling at the end of last year on those, and I might just be getting ahead of myself, and we'll be taking those forward. So just a quick reminder on Snowy. Snowy is nearly 4 kilometres long, sandwiched in between two gold mines. One is an artisanal pit, which we've got no data on. That's the one to the west. And the one to the east is a historical pit, which has been, I think they're applying for a mining license, and that used to operate at around 50 grams per tonne gold. And so we're looking at this as a potential low sulphidation epithermal system, which can be very high grade. They can be very large. There's a few examples there of more than 10 and more than 20 million ounces at the bottom. And so, we're excited to advance that as well. We're waiting on some rock chip results for Snowy, and the idea there is to progress that almost certainly with IP and then potentially drilling. We have had some high-level interest to partner on this target, so we've had some conversations, and management will make that decision if it's appropriate and the value is appropriate when the time comes. Piket and Judzha are a little bit earlier stage than Snowy. Piket in particular is a very, very large prospect, more than 8 kilometres long. And that's 8 kilometres of intense alteration of the style that you like to see with a porphyry target. So very high temperature minerals like the porphyrites and so on at surface. We've sampled gold in both targets, gold and silver, and so we know that they are mineralised. And what we'd like to do is get the results of our soil sampling, and then that will help us form an opinion of which areas to focus on this year with certainly geophysics first, probably infill sampling, and then follow-up drilling. Once again, with these targets, we're conducting the early stage work, which is the lower cost work for these. However, if a partner came along at the right with the right valuation, then we'd be happy to entertain those. Certainly, drilling out a porphyry target can be an expensive venture, but testing them initially to find out if they're mineralised and build the prospectivity is something that eStar can easily achieve and afford with our current capital position. So there we go. 2026 is going to be hopefully even more transformative than 2025. We left the run late last year, announcing a couple of deals from October through to December, but we were able to get them over the line, and now 2026 is the year that we execute those strategies. So what we really hope to deliver is on Verkhuba, we'll be delivering drilling results, feasibility studies, hopefully mining license applications. Additionally, with Verkhuba, there's the potential for exploration upside, so I don't want to rule that out. It's a distal VMS, and so there could be more discoveries to be made there as well. We hope to progress Rulikha, which is 100% ours, both the deposit itself through to drilling approvals, and then the exploration, which we already have the approvals for, the exploration areas to the north, Rulikha North and Talovskoy, and with any luck, make a discovery there of brand new VMS deposits in this infrastructure-rich region. We will get very much on the ground and be conducting a lot of ground truthing, a lot of historical data review, and hopefully applying for our first licenses with the Endeavour joint venture in the first half of this year. And on top of that, we'll be progressing the exploration and potentially partnering on our copper porphyry and epithermal projects. So the eStar team has been incredibly active. It's growing. It's going to be a really heavy news flow year that's been diversified on success. So there'll be any number of targets which could provide a multiple of returns for shareholders. But importantly as well, in terms of value today, any one of these deals probably is almost backing the market cap of the company. And so, we feel in this market, we are drastically under appreciated in terms of share price on a risk reward basis for what we could potentially deliver this year. So thank you very much all for your time. I look forward to your questions, and I'm happy to help in any way I can.
Alex, thank you very much for your presentation. Ladies and gentlemen, please do continue to submit your questions just by using the Q&A tab situated on the right-hand corner of your screen. Just while the company take a few moments to review those questions submitted today, I'd like to remind you that recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboard. As you can see, we have received a number of questions throughout today's presentation. Can I please ask you to read out the questions and give responses where appropriate to do so, and I'll pick up from you at the end.
Thanks very much. I'll kick off straight away with the first question. Congratulations on all the recent success. If you've not covered this in the live presentation, what's the plan for Snowy in 2026 and beyond? I think I have covered that. So ultimately, if eStar does not partner, I would like to see that project progress through to drilling. And so we will see how that plays out over the next couple of months. I recall you mentioning that Xinhai is interested in future deals with eStar. It's a long-term goal to process ore from Verkhuba and Rulikha at the plant planned in the Xinhai JV, assuming acceptable terms to both eStar and Xinhai. Is this factoring into the decision on where to build the processing plant, or impacting a potential design to accommodate potential future expansion for Rulikha? Or is this a lower ranking option and eStar would prefer to be standalone operators? That's actually a fantastic question, and one that the board of eStar are, I guess, perpetually toiling over. At this stage, we feel that we can advance Rulikha standalone, largely because it's just permitting and drilling at the moment. We would like to make either new discoveries there ourselves, or we'd like to permit the operation and test the Rulikha deposit itself ourselves, and we think that's something that we should manage internally. However, once we've either made a discovery or confirmed the Rulikha deposit and converted that to JORC, then it becomes in a similar position to Verkhuba that we need to progress it through to production. And at that point in time, it would make absolute sense for us to look at the synergies between those two projects. And, are they standalone operations? Can they operate together? My feeling is if there's a new discovery at Rulikha, it would warrant a new plant. So we'd have to see how that sort of plays out from an economic trade-off study. But for the time being, we're going to keep the two separate, and we'll assess, as the discoveries are made or as the permissions are granted. Thanks very much. With regards to resource delineating, what is the likely timeline to get Rulikha to a similar point where Verkhuba is currently? That's a very tough one to answer, because I can't tell you when all of our permissions will be granted. Due to the proximity, it's not a process we've gone through previously, where we could be drilling within 3 months of having the license awarded. Rulikha is a bit different. So I would like to say it would be this year. I would very much like to say it would be by Q3 this year, and that's my intent to try and achieve that. Based on my calculations, the Verkhuba joint venture should generate significant free cash flow on the company's behalf once it's in production in late 2027 or 2028, if all goes as planned. I understand Xinhai will be responsible for initial capital spend at Verkhuba. Additionally, Endeavour will be responsible for the initial exploration spend on that JV. How does the company plan to manage cash and exploration spend on remaining projects until Verkhuba is producing? Is the plan to make the existing cash plus any potential proceeds from possible future deals last until Verkhuba is producing in order to minimise shareholder dilution? That's a very good question, and I would say yes, that's the intention, and yes, that's very possible. But I would highlight with an exception. And the exception is that if eStar have success on its existing projects, for example, if we drill a massive sulphide target at Rulikha, or if we have success at Snowy, with a fantastic intersection, or an acquisition which we can enable, that requires additional capital, then we would seek to raise additional capital to fund those projects. we have, based on the warrants converting and the Endeavour investment, we comfortably have enough capital to see through the next 2 years and still conduct meaningful exploration programs across all of our tenements to decide if they stay or go, or what the next steps are. But if we do need to ramp up a VMS discovery or an epithermal discovery to a 10 or 20,000 metre drill program, then yes, it would make sense to raise capital for the purposes of conducting that program. Which project excites me the most? I like that question, and it's almost like picking your favourite child, so it's a very difficult one to answer. I like them all for different reasons. I've said before that no project stays in the portfolio if it doesn't warrant the next level of investment. We are not in the business of land banking, of pretending projects are better than they are and dragging them out for the stock market, to raise additional capital. If we get results in any project which does not warrant the next level of investment, then that project ceased to exist for us, and it's either dealt or we just drop it. I like Verkhuba because I think that's obviously something that will take us into production, and from what we see in the core, it's distal. So I would love to see the ground EM survey done and find out if there's a massive sulphide source there. If we discover another 20 or 30 or 50 million tonnes at 4 or 5% copper equivalent, like some of the other mines in the region, I still don't mind owning 30% of that project, because that will certainly extend the mine life and move straight into production of some pretty high-grade material. I really like Rulikha because it's already got that historic result, and I like Snowy because of the scale. I really like Piket because it's even bigger. It's just earlier stage. 8 kilometres of strike at Piket's just an outstanding alteration signature that has mineralisation and some historical work. And so for different reasons, I like different projects. But as soon as we get each level of result back, that priority list will change. For the 23 million tonne Rulikha target, have you already submitted the environmental impact assessment to ensure drilling can start mid-2026 as planned? Yes, we have. Now, that doesn't guarantee we get the access and results. We're expecting a few reviews, but we have submitted the EIA. Peter, historical delays in Kazakh labs have hampered your news flow. How are you and your partners ensuring that the 2026 drill results won't be stuck in a 6-month backlog? Look, that's a very good question, Peter, and I agree that's been a real problem for us, certainly in 2026. I'd like to see us diversify our lab use this year. We will be at the behest of our joint venture partners. So as I understand, Xinhai might well be bringing their own lab to site. That's not in the contract, but that's what they've indicated. And Endeavour might have some other requirements, for example, using ALS, which is yet to be completely confirmed. But eStar in the past has used a number of other labs in country, credited labs that we have visited and are very, very happy with the work that they've done. And so for our own work, where we have control, then I would like to see a diversification of our lab use. With the appropriate QA/QC, I don't see any reason why we shouldn't do that. Regarding the December 2025 SSU code amendments, have any of your Karaganda porphyry licence or Rulikha exploration area been designated strategic or underexplored territories subject to the new 50% mandatory national company participation? Peter, I've got to tell you that I am not aware of this rule change. I sit on the board of the Kazakhstan Chamber of Mines as one of the founders of it, and there is no 50% mandatory company participation in Kazakhstan. So I'm not 100% aware of this. Certainly, we've not received any notification of any such thing. Do you already have the proof of financing documentation required on the 2026 rules to prevent any risk of license revocation? Well, you're not awarded a license without proof of financing in Kazakhstan. You have to demonstrate that you have the capital available on bank account in Kazakhstan for 30 days prior to application. We've received new licenses very recently, and we've been able to demonstrate that. So no, I'll just simplify the answer. None of our licenses are in threat. To the best of my knowledge, none of our licenses are in threat by either revocation or in partnership. We feel very, very confident about that. Okay, thanks, Alex. Exciting times. Please, can you outline the exact share dilution that will come over the next couple of years, assuming there is no additional requirement to raise funds, say via market placing for existing new shareholders? Philip, I'm not, I guess, only via the options that are being exercised. I gave a quick highlight of that in the presentation that will go up on the website. We'll have a little bit more information, but basically there's 5.2% currently, 5.2% of the shares on issue as options. Many of those are at 5p, so they're out of the money currently. Even the employee ones have an average of 3.1p. So up to, well, let's hope it's 5%, because that means we're at 5p, and in fact we need to be over 10p for a lot of those performance shares to vest as well. So if we are over 10p, I'm sure hopefully investors won't mind too much about those options vesting. Okay, given the great recent announcements with partners and the wider market failing to appreciate the nature of those deals, what do you intend to do in order for the wider market to recognise the importance and true value for shareholders? So firstly, I'd say that, yes, I feel we are drastically undervalued. I think there's just partly a timing issue on all of this. You make some good announcements which see your share price go through a 3p hurdle where a number of warrants would be exercised. I know there were a number of shareholders which sold into that price rally in order to exercise those warrants, and some, just long-term shareholders that took it as to lower their position as a liquidity event, which is portfolio management. And so what I would like to see is I think just as we execute throughout the course of this year, I do more presentations and keep the market up to date. We put out good news and touch wood, make some discoveries, then the market will appreciate accordingly. I think we've got good eyes on the company now. We've got very good exposure. And if we continue to do that, then, I would like to see the share price, and I think the share price will rise accordingly. There's a big 3p headwind that's gone now. We've gone through a fairly quiet period in January and February, both for the company in terms of announcements, because it's not the field season, but also the markets in general. While it's summer holidays or winter holidays in the UK. I think as long as we deliver the news flow, then the share price appreciation will come. So Bill said, from a PR point of view, the story seems more complicated than it needs to be in the telling. Would it not be better to focus on one or two near-term projects? Potentially, Bill. I guess we're balancing up between opportunity and disclosure. As a publicly listed company, we need to have continuous disclosure obligations. And so I feel that if we were putting out news, for example, on Snowy and Piket, which might be less near term, and Judzha, that might just come as a surprise to the market if they haven't heard about it in a presentation that they watched. It's some new data or new information that they've got no context for. So what we hope to achieve is a high level 20-minute presentation which gives you a summary of everything that we're working on. Is it complicated? Yes, potentially. But I have to say, I'm not willing to bet my entire company livelihood and personal reputation on any one single project which might have issues. I like to balance out partnerships. I like to balance exploration. It's a risky business, and so for us to be able to have the highest likelihood of success, I think that involves a multiple targeting approach, both for strategy and partners. So it makes sense if I want to build a big company, to have that as a business plan approach. And then certainly in my view, it makes sense to present that so people aren't surprised when it comes to market announcements. If one project in particular takes over, is a discovery, and we are drilling that out and we own it 100%, well, then that will feature far more heavily in the presentation. But as it stands today, I'm quite happy being a little bit diversified. Stuart's asked, have there been any further thoughts on dual listing on the ASX? Stuart, there have. I've done quite a significant amount of due diligence with regards to this. We could list on the ASX today and either raise just a little bit of capital, which potentially shareholders would see as dilution. The issue that we've got is actually with regards to our projects. So the ASX listing code wants to see us be able to spend 50% of whatever capital is raised on day one. So if you raise, pick a number, call it $5 million on day one, then you need to spend $2.5 million on areas that are already approved. All of the work program is approved. Now, if I wanted to come to the ASX, I wouldn't spend £300,000 of shareholders' money on that listing without having a meaningful outcome. So getting new investors involved, and that meaningful outcome involves raising a higher level of capital, which we don't need to do today, by the way. And that higher level of capital would also mean we need to be able to allocate that. And based on where these projects are at the moment, I can't come up with an exploration program with that scale of budget. If we get Rulikha approvals, we can, or if we make a discovery this year, then absolutely we can, because we'd be following through with a bigger work program, and hopefully we'd be raising at significantly higher prices and considering doing that on the ASX, depending on demand and so on in the UK. So yes, it's constantly on my mind. I'm acutely aware of the process. I've had a lot of interest from ASX brokers to assist us and participate. And if it becomes the right time for the company and appropriate for shareholders in terms of dilution and so on, then we'd execute that. But as it stands today, we don't see that risk reward, that we don't see that potential reward from a listing based on the dilution. And that was the last question. So thank you all very much for your time. I guess a final quick summary, in particular, potentially for Bill and whoever else, which is arguably said it's a little bit complex. I'd like to simplify it. We have one copper deposit, which we are not paying to get into production, and we hope it'll be into production in the next 2 years, completely undilutive for eStar shareholders. We have another project which has the potential to be twice as good in terms of the grade, and even lower strip ratio for a second copper deposit, which we own 100%, which if we can permit and drill, would see us absolute multiples in the value if we can achieve similar historic results. We've got additional exploration upside, both for VMS and epithermal and porphyry exploration. And we've got a joint venture with one of the world's best explorers, in fact, and best gold mining companies, which also covers a significant portion of our overheads as a company. So most of the capital that we have in the bank today will be able to go into exploration, is not being used for G&A. So we see this as a really fantastic opportunity, and I would like to thank all of you very much for coming along for the ride in a bull market in copper and gold, no less.
Alex, thank you for updating investors today. Can I please ask investors not to close the session, as you'll now be automatically redirected to provide your feedback in order that the management team can better understand your views and expectations. This will only take a few moments to complete, and I'm sure will be greatly valued by the company. On behalf of the management team of Star Resources PLC, we'd like to thank you for attending today's presentation, and good morning to you all.